Welcome to this week's special presentation titled Identifying Your Exits. My name is Todd Shaffer, Manager of Research for VectorVest, and I'll be your presenter this evening. Knowing when to sell is a perennial question for investors. Well, why is that? Well, I would suggest that it's at least in part because there are so many potential answers. It really can be overwhelming, and of course, the scope of the question a little bit large for a 10-minute presentation tonight. So let's see if we can't develop the principles and the concepts that we need to know to identify our exits. Dr. DeLito shared some of his thinking on this subject in his book, Stock Strategies and Common Sense. Let's take a look. If you don't have your copy of the book, simply go into the program, click on the Welcome tab, and you see a download link. Just click on that link, and you can download your own personal copy of the ebook. If I go into the upper left corner, we can go to the outline, and we're going to scroll down to the chapter titled Stop Prices, Are They For You? And I'm going to zoom in a little bit so we can get that printing larger on our screen. In the chapter, he begins, the use of stop prices is one of the most controversial and misunderstood methods of selling stocks. Stop prices are double-edged swords. They can cut losses and protect profits, or result in high turnover and lost opportunities. Scrolling down, he continues, while there are no hard and fast rules for selling stocks, each investor eventually must make decisions to sell. You cannot spend paper profits. The need for cash money, tax considerations, and a myriad of other factors enter these decisions. Whatever the reasons, the primary purposes of selling are to protect profits and to control losses. Stop prices are ideally suited to do both. So if stops define and limit losses, if you don't use them, are you not accepting unlimited risk? My experience as a coach has been that most of us have a point of max pain, right, where we'll give up on a trade. The operative question is, how do we define it, and how can we incorporate it into a systematic approach that puts probability of success in our favor over time? The answer is rooted in your investment objectives and your investor temperament: conservative, prudent, aggressive, or speculative. Continuing lower, I have found that the stop price of a stock should be based upon its safety, fundamentals, and price trend. Safe stocks with solid fundamentals should have looser stop prices than those with weak fundamentals. These considerations allow investors to stay with solid stocks longer and get out of weak stocks sooner. And that phraseology may sound familiar if you're familiar with the VectorVest stop price. But before we get to that, let's continue. Prudent and conservative investors dealing in safe stocks would experience lower turnover, while aggressive and speculative investors would have much higher turnover rates. So we're beginning to correlate the sensitivity of our stop-loss vehicle and our objectives for the trade. And so you have to start with what is your objective in the trade. But this concept is easy to demonstrate. Let's move back into the program. I'm going to move from the Welcome tab to our Viewers tab, where I've opened the Stock Viewer. And so we know that our default sort is by VST descending, but we also recognize that every stock in the database has a stop price calculated. If I right-click on Clearfield and go to a stock analysis report, I can scroll down to the stop field, and I can see that the stop price is an indicator of when to sell a position. A stock stop is computed from a 13-week moving average of its closing price, and it's fine-tuned according to the stock's fundamentals. In other words, stocks that have strong fundamentals will actually move our calculated stop price away from the price action to keep us in the stock longer, to give it room to breathe, to be more resilient to pullbacks. Whereas a stock with weak fundamentals will actually move our stop price closer to the price action to be more sensitive to the adverse move to get us out more quickly. Now, it is based on a 13-week moving average, so that's a relatively longer time frame, so maybe not a trader's tool, but it provides a great benchmark or perspective from which to start. So that's the VectorVest stop price. I want to close the report And what I want to do is I'm going to sort the list by our proprietary indicator, comfort index. This is an indication of price persistence. So these stocks that have the highest CI values are the ones that are most persistently rising over time. So let's graph ARLP, because what I'm really looking for is that nice, smooth and steady price action, bottom left to upper right. So I'll hit the graph Alt Tab. And I've opened a graph for ARLP. I'm using the VectorVest simple graph layout. And on that graph, by default, we're looking at a 1-year time frame. I have the price of the stock on daily candlesticks. I have the VectorVest stop price is the teal line below that VectorVest stop price. I have our relative timing indicator and earnings per share on the bottom subgraph. So I'm going to take those off for now. And just looking at the performance of the VectorVest stop price relative to the stock's price performance, it has done a very good job of managing that stock as it has moved up the page. If I put on the recommendation profile ribbon at the top of the page, we can see in the last year, it actually had price close below our stop price in this period and would have stopped us out of the trade. So using the VectorVest stop price in this manner, I would have traded ARLP in this past year twice. I would have entered in this time frame. I would have been knocked out on stop loss, and re-entering here would now still be holding the trade to this point. Let's contrast that performance with what you might see on a much more sensitive approach. I'm going to add a moving average to the price graph, a 20-day moving average. And we can see I'll take the stop price off for clarity, and maybe I'll even make that line a little thicker. And I can see the 20-day moving average is following the price action much more closely than the VectorVest stop price was. Here's your comparison. And because it's tracking the price action so closely, it has many more crossovers and therefore many entries and exits more than we saw with the stop price. So while the stop price had us trade this price action twice in the past year, the 20-day moving average would have had us trade it once, twice, 3, 4 times. Let's call that 5 times, 6 times in the past 1-year time frame. So which one is better? Well, I would submit to you that it's really dependent on your objective as a trader. If your objective is to hold this stock as long as you can and minimize your trading activity, then the VectorVest stop price was the better selection. If your objective, however, is to swing trade the position, where you try to take just the meat of the moves, get in early off the lows, get out early off of the highs, this might be your preferred solution. Yes, it's more actively traded, but it'll have lower drawdowns as we didn't ride the position back down in its natural progression to higher highs and higher lows. And of course, as Dr. DeLito related in his remarks, one of the mitigating factors is that ARLP has fundamental performance, consistently rising earnings over that 1-year time frame, driving valuation and therefore prices higher. How you execute the trades on your stops is also a variable that you can control. We like to say you can use the stop loss as gospel or as a guide. So for instance, if it's gospel, then we're looking for the VectorVest stop price, for instance, to be a hard stop where any tagging of that value would close the trade. If it's a guide, then it's a mental stop where triggering of the stop price would get us to look at the trade and make a determination of whether or not to close the trade. I can also apply the stop in a trailing methodology where, for instance, I adjust the stop as the stop price moves higher. I never adjust it lower. So like a trailing stop, I'm always looking at the highest value of my stop loss. In this case, the stop price, which is in the VectorVest world, a ratchet stop. And eventually this price would have pulled back and tagged us out on that ratcheted value here. I can apply the same methodologies to that 20-day moving average. Again, we see it tagged the value here, so on a gospel basis, that would have knocked us out of the trade. On a guide basis, I didn't close below the value, so I was able to stick with it. And then finally, I get this solid close below the 20-day moving average to trigger the sale, perhaps. I can also use a ratcheting approach to that 20-day moving average. Hopefully you can see. Maybe I'll zoom in here a little bit. As we followed the moving average higher, every night we'd be making an adjustment to our line in the sand stop. And on this day, we tagged that value, triggering a close of the trade. So do we want to use our stop loss as gospel or guide? How aggressively do we want to apply the stop? So our job is to choose a stop method that works best for the kinds of stocks we trade over time, putting the probabilities of success on our side. Studying graphs of your past trades is a great way to develop a plan. Remember, it's not about being right on every trade. In fact, I anticipate that I'll have losing trades. It's the cost of doing business. What I really want is to have my average winning trades outpace my average losing trades in combination with a winning trade percentage that delivers consistent profits over time. And that's true whether I'm an investor, a swing trader, or a day trader. Returning to stock strategies and common sense, using stop prices to control losses, the cardinal rule of investing is to let your profits run and keep your losses small. This goal may be achieved by virtue of the stock market's tremendous liquidity. It allows investors to specify both a buying price and a selling price at the same time. The best time to make these decisions is before buying a stock. So once we've pre-selected our stop methodology, we can define our exits and therefore our risk in the trade. We also then avoid the anxiety of trying to decide what to do in response to our greed and fear emotions popping up as the trade progresses and the news headlines start hitting your inbox on an intraday basis. So we're starting to bring the question into focus. The quote-unquote right stop loss for your trading is the one that identifies abnormal price action for your approach. But which one? There's so many. In fact, the number of methods and possible combinations are infinite. Another reason why this is a perennial quest. VectorVest offers many solutions with our graphing and portfolio automation tools. So I want to do this in a little overview because we just don't have time to go through all of the indicators themselves individually. Let's start with our graphing tools. This is a great place to start because everybody, first of all, has all these tools in their graphing package within VectorVest, but also graphs are just very intuitive, very visual, and as Dr. Toledo says, graphs are the DNA of a stock. So we have all of these layouts, and of course I have a couple custom layouts that we've created within this account, but this is a great place to start with some of these curated layouts. For instance, the VectorVest simple layout. We're looking at the price, the VectorVest stop price, our RT indicator, and the earnings per share. And you can just notice as you scroll through historical trades or top VSD stocks, get a feel for how they work and how effective those indicators are at indicating for you potential exit points from the trade and how successful that trade would have been over time. So while I would recommend all of them, a good place to start, VectorVest Simple is a great starting point. The Near Perfect Indicator, which has been the most recent addition to our layouts and a recent subject of our special presentation. The operative function here is when we see this 5-day moving average of RT fall below the 40-day moving average RT, indicates trend breaking down and a potential exit point from that trade. So you can explore that feature. My next stop, the Enhanced Pro Trader Timing Layout. It includes some technical studies. Let's get to a clean graph. where we're looking at a 30-day weighted moving average of the price, a detrended price oscillator, a technical study, and the MACD technical study. So for those of you who are technicians and like technical indicators, a great layout to start with. And the acid test. Perhaps you're familiar with the Golden Cross, the 5,200-day moving average used by many institutions. Well, in our version, Dr. Toledo shortened the 200-day moving average to a 150-day moving average to make it a little faster than the institutions so we can get out in front of them. So some simple moving average concepts here as well. Of course, if we click on the Add Parameter list, we have all of these parameters within the VectorVest system we can graph. But another place a lot of folks like to start is in the technical analysis piece, where we can add any of these technical indicators to our studies as well. Coming back to our list, we also have a graphing function called Profit Locker. If I right-click on Alliance Resources, I can come down to a Profit Locker Pro graph. Now, this specific tool is an add-on feature to VectorVest, so there is some cost involved. You can, of course, contact us in product support for some more information. Profit Locker Pro offers dynamic stop-loss conditions, where you can see we start with a trailing stop that then broadens once we get back to break even in this case, and then starts tightening as we start building gains in the trade. The application of that looks something like this, where we started with our 1-year time frame. So we trailed the price action, locked in break even, and then started tightening our trail as the price advanced. In that time frame, of course, ultimately price broke down below that price, locking in our profits. And of course, you could trade that off the chart, but you can also automate these stops with our portfolio management tool, in particular the Portfolio Genius. So the Genius operates in both the Portfolio Manager as well as the Robo Trader. But if we take a look at some portfolios, let's just go into this portfolio and let's edit the portfolio. And I can automate my stop criteria, and I have all these stops from which to choose. So here we saw the Profit Locker Pro that would be executing what we just saw on the graph. And its sister layouts, the Profit Locker Pro Average True Range approach, as well as the recommended stop approaches. The Profit Locker, we also support trailing stops, percentage gain loss stops, the recommendation profile. So when we got the sell rating, because price fell below the VectorVest stop price, then that stop would trigger. Another I'll highlight related to that VectorVest stop price is our ratchet stop. So using the Portfolio Manager, you can set up the system to send you alerts when stocks have reached their selected stop criteria. So even though your broker may have no idea what the ratchet stop is, you can enter your sell order when you have the alert from VectorVest. And of course, the RoboTrader tool uses the same engine, but instead generates order tickets that you can actually transmit the order to the brokerage, as well as generating those alerts. And of course, it has additional features. So give us a call if you'd like some more information about RoboTrader. So that's a quick overview of some of the tools within the VectorVest program, and I know still overwhelming, right? Particularly for the uninitiated. So here's my suggestion of where to start. Let's walk before we run and start with the VectorVest stop price. We teach you how to use it in our Quick Start course, which is free on the training tab. In particular, Weed Your Garden talks about identifying your preferred stop loss. But remember, we want to think of it holistically. It needs to work in concert with the other elements of our trading system. The when to buy and the what to buy. Then, as you develop your skills, you can expand your knowledge by attending courses like our How to Master Moving Averages course that's organizing right now, starting very soon, and our many special presentations like this one that Jerry did, where he showed us how once we've established or selected our stop method, apply it to your trade at entry, and you can determine or define your maximum risk in the trade to be within our 1 to 2% risk threshold to the portfolio at trade setup. So I know we've only been able to scratch the surface here, but the key takeaway: stops define and limit our losses. Our job is to choose the stop method that works best for the kinds of stocks that we trade and the way we trade them over time, putting the probabilities of success on our side. VectorVest offers the tools, training, and knowledge you need to identify your exits. Thanks for watching.